posting those up. I didn't post the other one up. Okay. So my apologies for not having that. Now that's strange. Okay, there it goes. Okay. All right, good. So now we're recording and I'll post this up. Now, the second thing that you will see are the basic financial statements. So when we take a look at what's in the MD&A, it really is focusing on the information that is in the basic financial statements. It's elaborating on much of that, although there is some stuff that goes beyond what's in those basic financial statements. But most of it, it's a financial document. It's not, hey, San Francisco is a beautiful city and all that. It might say, it really doesn't say those kinds of things. That's not what's going on. It's basically talking about the information that is in the financial statements, although it goes a little beyond that. So when we get to the financial statements and the related notes, then we have the government-wide, we have the fund financial statements, and we're going to be taking a look at some of the details to what represents the government-wide and fund statements in a minute. And then we have required supplemental information other than MD&A, which contains information about the budgetary accounts, comparisons between budget and actual. Carmen, I think you said that San Francisco does not use the modified approach, right? You actually account for depreciation for fixed assets,
Correct.
whatnot. So I don't know that there would be a discussion about the depreciation accounting and the required supplemental information, since if you do use the modified approach, then you have to have certain schedules and whatnot that you have to provide. That would be an example, not for San Francisco, but for other entities that use the modified approach, of the type of thing that you would see down in the required supplemental information other than MD&A. That's the third thing you see. Okay, so let's talk a little bit about the MD&A. And again, it is expanding on the financial information to a large extent. Now, what I did was I went ahead and pulled something from the state of California sometime back about a section that talks about economic conditions. But this is a little dated, and I started to kind of update it here earlier. And then I thought, well, rather than update it here, okay, why don't I go ahead and just look at and see what we see in San Francisco. Okay, so how did I want to do this? When it comes to searching, this mode is better if you use the search tool, but if you're looking for a specific page, the other format is better. But I'm going to go ahead and just see if I can get to it kind of quickly. 23, I believe, is the page. At least that's what I saw earlier. Yeah, here we go. Okay. So, I don't know if you can see this real clearly on the screen. I guess I can maybe make it a little bigger. Okay. So economic factors: San Francisco stalling job market began to stabilize. From July 2024 to October 24, the San Francisco Mall gained 2,900 jobs. The unemployment rate was the second lowest among California's 58 counties. Job gains. What else? Okay, tech layoffs, persistence of work from home, coming from COVID and whatnot, etc. Okay, and so just giving a notion of the type of things that would be in the MD&A, economic conditions and outlook, is something that GASB has said would be in here. And as we know, San Francisco has received the Reporting Excellence Award from the Government Finance Officers Association. And so, yeah, you're following GASB requirements and putting this information up. Any of you involved in generating any of the information for the MD&A?
Yeah, some members of, well, maybe not on this call, but other members of the city. So like this particular little section comes from a few different people who work in our budget and analysis division. So
I see.
not even actually my group per se, but yeah, we all work on different parts.
Different parts of the MD&A.
Yeah,
Yeah.
yeah,
I mean, I think this would be kind of a fun thing to work on, right? Because it's helping you to really understand a lot about what's going on with the city. And I'm sure they didn't put every single thing they know about the city in here and picked out some key factors. So I thought this was kind of cool. Okay,
yeah.
good.
Thank you.
Did I share the story? I might have. It was actually, I had some folks from Min. Did you have a question or a comment? I saw a hand go up. Oh, maybe Min saying she works on it.
Oh, no. Was it, did I put my head up?
I
Sorry.
see a raised hand for some reason. Yeah. It's a white glove. I don't know if it's a Michael Jackson tribute or it's a
Sorry.
white glove going up. No, that's okay. Um, Not a problem. I think you can turn it off by, not sure how you turn it off. Does anyone know? Because otherwise I'll keep looking and thinking that somebody's trying to talk to me.
I just raised and lowered. Is it still me?
It's still showing. Is everyone else seeing it? Am I the only one seeing it?
You can't see it. I can't see it, I should say.
Okay. All right. Well, I'll just, if you do need something, man, though, you're going to have to say, hey, John, because I'm going to ignore that at this point. Okay. But let's go ahead and go back and take a look at the slides now. Oh, the story I was sharing was that it was had some folks from MGO, the entity that audits, come in, the audit team that audits City and County of San Francisco. And one of the members of the audit team from MGO was basically saying that he felt that he would be qualified to maybe run for some sort of office in the city because he understood the operations so well from having worked on the audit all those years. I don't know if he ever pursued that or not, but he had said that he was really enjoying all the things that he was learning from working on the audit. So, okay, good. So let me go ahead and get us back to the slides. I guess if I lower this, okay. Put it back in slideshow mode. Hopefully it won't punish me for this. Okay, good. All right, good. So what we're going to do is we're going to take a look at the government-wide statements, understand the structure of those, understand how those work. And then we're going to take a look at the two statements. There are only two at the government-wide level, the statement of net position and the statement of activities. Okay, so when we look at our statements, they are prepared on the accrual basis of accounting, economic resources measurement focus. Okay, we have two columns. We have our governmental activities column and our business type activities column. Now, I kind of asked the rhetorical question here when we take the internal service fund, which is at the fund level, why do we include it in governmental activities? Because most of the services that are being provided out of a internal service fund, thus the term internal, are being provided to other governmental funds. I believe there are some governments that take something that is technically accounted for at the internal as an enterprise fund at the fund level, and they still report it under governmental funds because it has met the definition of an enterprise fund, yet most of the activity is provided to governmental funds, and so they've justified rolling that. But for the most part, most entities will go ahead and enroll those internal service funds into the governmental activities column at the government-wide level, and enterprise funds stay in the business type activity column. And again, as we've stated, the fiduciary funds are not reported at the government-wide level. Again, with an operational accountability focus, it is not necessary to include our fiscal responsibility for those various fiduciary funds at the government-wide level. Where we have fiscal accountability at the fund level, yeah, then we will report the fiduciary funds. Now, this format is what is required for our governmental fund, and I'm calling it for the governmental funds, the balance sheet, and then for our government-wide, it's statement of net position. So we're going to focus over here first. Then when we talk about our governmental funds later, we'll focus more on this side of this comparison. But I have them here so we can kind of see them face to face and see how they differ from each other. But we'll start dealing with this side after we get into more of the governmental funds. But when we say all assets, that means both current and non-current. And then we have something called deferred outflow of resources. Now, we're going to get into the deferred inflows and outflows a lot more starting next time. I'll give you a basic idea and I'll focus on deferred inflow here to give you a general idea of what we're talking about here, but we'll get more into the literal accounting for these more next time. But we have all assets, both current and non-current, plus our deferred outflows. Deferred outflows are kind of like prepaids, but not quite. And so GASB has come up with a category of something called deferred outflows of resources. And then we have all liabilities, current and non-current, full accrual accounting. And we have something called deferred inflows, which are kind of like deferred revenue, but not quite. And so GASB has come up with a category that is reported next to the liabilities. And for deferred outflows, those are reported next to the assets. And then the difference is net position, okay? So you remember that what? Assets equal liabilities plus stockholders' equity, owner's equity, whatever, right? Okay. Now, what I like about teaching accountants is I say this and everybody's like, no kidding, John. Yeah. When I teach this to, at Stanford, the School of Medicine, or engineers, they like to argue with me that this is not the case. And I'm like, stop, guys, stop. Yes, it is. Just accept it. Okay. This is not a time to be questioning anything. Okay. But what happens? You could report this as what? As assets minus liabilities. And that difference would be what? Would be stockholders' equity. Well, this is the required approach. GASB has said you must report your statement of net position at the government-wide level. You must report it in a format in which we are subtracting the liability section from the asset section, and what's left is like the stockholders' equity, the equity section, of the balance sheet. And in government, we call it net position. Now, we haven't got to a point yet where we're selling off shares of our, cities and shares of our state and shares of our country as stock. So there is no, common stock. There is no additional paid-in capital in excess of par and all that. So what net position is really like, okay, it's like LAKE, okay, retained earnings. It's really very synonymous to the retained earnings section of a commercial entity's balance sheet. But notice we end with that in a balance sheet that you might pick up for a corporation, the assets tie to the liabilities plus stockholders' equity. And the last thing you see is a total for your liabilities plus stockholders' equity. For our statement of net position, we show that net position number at the bottom, what's left over after we subtract our liabilities from our assets. We call it net position, but it is very, very similar to retained earnings. I'll talk more about the balance sheet. This is government-wide level. I'll get more to that a little bit later. Okay. All right, good. So that's for the government-wide level. I mean, excuse me, the governmental fund level. Let me write that, governmental fund level, and we'll get into that more later. Okay. All right. Now, deferred inflow, and we're going to get more into this later, but I just want to give you a sense of, because we had it over there. What is this deferred inflow thing? Okay. And you can see I have this very technical drawing here. That's a joke. I know it's not technical. Okay. But when we think of deferred inflow, okay, we're really seeing how we're going to take some monies that have come into the government, some resources that have come into the government, often cash, government money that has come in, often cash that has come in, and how it starts out maybe a receivable, okay, and how it has started out when it has come in, and if the government has neither met eligibility, has not met eligibility or time requirements, then it is considered a deferred inflow. Okay, government is not eligible yet for that money, and you haven't met any kind of time requirements. So it's a what? It's a caterpillar dreaming of becoming the revenue butterfly someday, right? Okay, then what happens? Then, as the government meets eligibility for the funds that have come in, but not yet met time requirements, then it becomes the deferred inflow. Okay, so did I say that correctly? Let me back up. I think I said it wrong. When the funds first come in and the government has not met eligibility nor time, it is a liability. It is, and you can't call it deferred revenue because they say the deferred word for deferred inflow. It is an unearned revenue, a revenue collected in advance. Key thing, it is a liability at that point, okay? Then, as the government meets eligibility but hasn't yet met time, then that money becomes a deferred inflow, and it would be reported next to the liabilities, but it's seen as something different than a liability. It's getting closer to becoming a revenue. Then, as that government starts to meet time requirements, then we go from a deferred inflow to a revenue. In other words, this item goes off of the balance sheet. It's no longer reported as a deferred inflow. It now is reported on the statement of activities, comes off the statement of net position, and is now reported on the statement of activities as a revenue. And we're going to get more into this later and the different types of transactions that would constitute these different stages and how a government would start to recognize from a liability to a deferred inflow to a revenue. And by the way, it doesn't have to go through, unlike a butterfly, it doesn't have to go through all three stages of this. Something could come in and start out as a liability, and then once the government meets eligibility, if there are no time requirements, it would go straight from a liability to a revenue. Any question on that? I know that gets a little wonky, but we're going to be kind of playing with different categories of revenue, and we're going to spend quite a bit of time in chapter 4 with revenue recognition and going through these different processes. Revenue recognition in government is a little different than what you would do, obviously, in commercial, or what we might do under full accrual accounting. Well, this would be full accrual accounting at government-wide level, but what we might do in the enterprise funds where we're actually providing service and earning the revenue that way. So we're going to have to go through a little bit of a different stage when we're talking about governmental activities. Okay. Question? We're good? All right. Okay, good. So let's go ahead and let's take a look at this statement of net position. Okay. And we can see that we have our governmental activities column as promised. Okay. And we can see that Under the governmental activities, we'll have what? The general fund, special revenue fund, just using my mnemonic here, debt service fund, capital project fund, permanent fund, plus what? Plus the internal service fund comes in here, right? Okay. Now, primary government, by the way, remember that we talked last time about what constitutes the primary government versus component unit. And remember, we said that what governments are either primary governments or component units. In order to be a primary government, any state, any general purpose government like a city of San Francisco, county of San Francisco is automatically a primary government. If you're a special purpose government like a school district, you have to go through and meet certain criteria. You have to have a separately elected governing board. You have to have fiscal responsibility and be legally separate in order to be a primary government. If you're not, you're either primary government component unit, and therefore you would be a component unit and you would be reported on the face of the government-wide statements as a component unit in a column or format. In most cases, being discrete presentation. Remember, we said you could also have blended. I think Carmen had stated that there are some that are for city and county San Francisco that are using discrete, and some others that are using blended presentation. I think, Carmen, didn't you say it's for some of the special revenue funds or something?
Yes.
Yeah.
San Francisco County Transportation Authority being one of them.
Right. Okay, great. So that's a special revenue fund? It's not an enterprise fund?
Correct. It's a special revenue fund.
Oh, okay. All right. Okay, good. Interesting. Okay. All right, good. So we come over and take a look. And we have our business type activities, okay? And business type activities are going to be what? Enterprise funds, okay? We'll take our enterprise funds and we'll roll them up into this business type activity. Now, again, for our governmental activities, we're going to need to do what? We're going to need to convert the governmental funds from modified accrual to full accrual. Internal service fund, we don't have to convert them, but we have to consolidate them. Enterprise fund, we don't have to convert them, we simply consolidate them. So let's go ahead and let's take a look at that enterprise fund column a little bit, just to kind of prove to ourselves a little bit that indeed it is true that we roll up the enterprise funds into this business type activity column. So we can see total net position. Okay, remember, assets minus liabilities constitute net position, but I'm just going to focus on net position here is 1,835,000 in this example statement of net position for this Progressive Township example. I use this example. I want to say that the textbook just sort of tosses, and I want to say it's the city of Denver. Anybody know? I forget what city they use, but they just sort of toss that to us and say, okay, here's an example. I find it easier to use, not an actual one to illustrate. And then we're going to go back and we're going to look at city and county San Francisco's here in a couple of minutes. But you have this 1,835,000 as the net position of the business type activities. When we get down to the fund level, so I just drilled down to that fund level. Remember, we've got government-wide. We have the fund statements, governmental funds, proprietary funds, which is what you're seeing on the screen here. And we're not going to look at the fiduciary funds now because they don't roll up anyway. So it's not relevant to this discussion. But we add these two. And this is red. The red print here that you see doesn't mean anything. But water and sewer plus the parking, those are two enterprise funds. We add those two together, and then we have the totals. And when we do, it ties 1,835,000. And that's the case because they're both using full accrual accounting. I cannot do the same thing with the governmental activities column. I cannot do that here just go and show you a bunch of governmental funds and show you how it ties, because we would have to convert from modified accrual to full accrual accounting. But we'll take a look, and there are some required reconciliation disclosures that we'll take a look at least how the disclosures work. We won't actually analyze that reconciliation until later, but we'll look at a couple line items on there, and we won't understand in our totality till later after we've gone through all the different activities of the different funds and whatnot. So it'll be easier to understand the nature of the reconciliation. But we will take a look at what the reconciliation looks like anyway here in a little while. Okay. Okay, good. Now, when we look at the governmental funds, okay, notice we have all these different governmental funds that are called out here. Okay, now we'll talk about major fund criteria a little bit later. Okay, but these would be considered major funds. Okay. These other governmental funds that you see here, even though they're not being called out as such, they are considered non-major funds. And we're going to look at San Francisco here in a couple seconds. But these are funds that didn't meet the major fund criteria. And in San Francisco, I think the only major fund, even though I don't think it's called out that way, we'll look in a minute. Even though it's not called out as a major fund, the general fund is always a major fund, and it's the only one that San Francisco reports. All the other fund types are considered non-major, and so there's just a column there for the other governmental funds, and we'll take a look at that. And then, of course, we have the total. Okay, notice, guys, key difference between full accrual and modified accrual. Full accrual, okay, for our government-wide, right? Current and non-current items, right? Okay. For our fiduciary, our proprietary funds, current and non-current items, okay, full accrual accounting. When we get to the funds, it's only current assets. It's only current liabilities. Okay, so we're going to be taking a look at that format here in a couple minutes. But the point here, just seeing the major versus the non-major presentation. And then this is that reconciliation that I was telling you about, and it needs to be provided. GASB says, hey, you got it. Remember the little arrow that went back and forth on the graphic? That's because of this requirement for this reconciliation. You can see here that what we do is we pick up the total fund balance for our governmental funds, okay, which is right here, this 4,195,000. On the reconciliation, we start here, total governmental funds, and then we start adjusting it, and it will tie up to the total of the governmental activities. And so when you come over and you take a look back to the governmental activities, and forgive my flipping around. Yeah, that's the total net position of the governmental activities. And we show how that connects to the total fund balances, which is like the retained earnings of the governmental funds. So how does the retained earnings, like retained earnings of the government-wide, relate to the like retained earnings, the fund balance of the governmental funds? And we start adjusting it. And so you take a look, and the classic example that we've already been spending time with here, you know, kind of understanding is, hey, you know, capital assets are not reported at the fund level under modified accrual accounting, but they are reported at the government-wide level under full accrual accounting. So we have to what? We have to add those back to the fund balance in order to get to the net position reported at the government-wide level. And there's some others here that we'll work with as we go along. And the reason I'm not going into every single one of them right now is because we haven't spent enough time understanding some of the classic differences between modified accrual and full accrual. And so it'll be more meaningful for us when we do that. But I can show you the internal service funds net position is added, because remember, when we're at the when we're at the fund level, the internal service fund is a proprietary fund, right? But when we're at the government-wide level, we roll that information up and put it into the internal service fund. So in order for this thing to reconcile, you would have to pick up the fund balance, excuse me, the net position of the governmental activities internal service fund. You'd have to pick that up, and you literally add it to the fund balance of the governmental funds to end up with the net position reported at the governmental activities government-wide, since we roll the internal service fund in there. Question? Okay, well, at the risk of my machine doing mean things to me, let's go ahead and see if we can get out of this. And let's sort of repeat this exercise. Really, did I close it? I think I did, but let's see. You guys still there? Yeah. This. I guess I closed it somehow. So 1 second, guys. That's cute. Where'd everything go? Seem to have lost my taskbar now. I don't know why that's happening. Really? Oh, I see. I have to stop sharing. I shouldn't have to. Let's see if that helps at all. Okay. So what I wanted to do is put that up. And let me try to share again. Okay, good. So I'm back to the report. Okay, and what I'm going to do is hope that the search tool lets me do what I want to do. And so I'm going to put the number 8406. Maybe I better put the commas. 8406 542. Okay, and put that number in there. And even though we may be in the no, okay, good. So here we are. I don't think we're in the MD&A. Good. Statement of net position. Okay. Governmental activities, business type activities, right? Component units. Some are blended that you can't see here. This is discrete presentation. And then we come down and we see that number I was looking for, which is the total of the business type activity total net position. Okay. Now, if I am using my search tool correctly, when I click on that again, okay, this is the statement of activities, and I'll talk about the statement of activities at the government-wide level here in a couple minutes. But the statement of activities sort of is a combination of the income statement and statement of retained earnings. So because the change in net position for the period, which is sort of like the net income, okay, which is down here, is like a net income number. Net income goes into retained earnings. So the change in net position for our governmental activities and for our for our business type activities and for our governmental activities, but we're focusing on business type activities right now, would increase, just like income would increase the retained earnings, a positive change in net position would increase the net position at the government of the business type activities government wide level. And so there's that number that's reported there. But what I really wanted to show you here is when we get down to the fund level. Okay, just like we did in our little exercise. Remember the water and sewer or whatever it was, or parking and sewer that we looked at in our little example statements. Okay, here we have the various enterprise funds. Now we're at the fund level, right? Statement of net position, proprietary funds. And we have the different ones. And when we add them up, okay, we have what? We have that same number. Okay, so we didn't lie. Okay, that would work that way, and it works that way here. Notice, by the way, the total net position for the internal service funds, which is rolled into the governmental activities. Okay, so we basically reproduced the exercise that we had with the example financial statements, and this is working very nicely for the city and county of San Francisco. At least I feel it's working nicely. Okay, now what I want to do, though, something I hadn't pre-planned, so forgive me if I have a couple of rocky innings here as I try to make this work. I'm going to put in this number, this 2520. 2,520. Okay. And let's see if I hit that. Okay, I'm going to see it there. Let me see where else I see it. Okay. Okay. Asking you for more matches. I'm asking you to go back. Let's see. What I'm looking for here is, okay, so it's not going to work. What I was looking for here is the reconciliation. So let me try that. Reconciliation. Let me try that. Okay. We saw it. Now I'm down in the notes. I'm looking for that reconciliation. Okay. I should know by now to never try to look for something. Ah, there it is. Okay, good. So this was the reconciliation that we were looking at. Phew, okay, found it. And we can see the amount reported for governmental activities in the statement of net position. That's that number. And then that reconciles to the net position for governmental activities. Okay, so we can see that that reconciliation would work the same. And notice capital assets are being added. Long-term liabilities will get more into or being subtracted, but very, very similar to the example that we saw earlier. Okay, and as I said, we'll spend more time with this later. Okay, but if I were to put this number, let me try that, 5, 8, 1, 3, 5, 8, 1, 3. 996. And I put that number in and I go back. Yeah, I will see it as the net position on the statement of net governmental activity. So obviously, I'm an accountant and I enjoy doing these kinds of things. You might find better uses of your time. But the one question I'm wondering is why my internal service fund didn't work. But I'll figure that out later and I'll talk about that next time. Okay. All right, good. Any question on that? Comment? Do any of you work on the reconciliation? Yeah, no. Some do, some don't. Carmen, any thoughts on that?
Yeah, one of our reporting staff works on the reconciliation.
Okay. That probably is working on the reconciliation hard? Is that one
Yeah.
of the harder things?
Yes, it is.
It seems like it would be, yeah. Okay,
Yeah,
good.
but she's really great. So she just keeps fighting with it until it works.
Yeah, exactly. I told you, I mentioned that for the federal government, the 32, whatever it was, agencies that constitute the consolidated financial statements of the federal government, because they use 32 different accounting systems for the agencies that constitute the consolidation, and then a different accounting system for what constitutes the consolidation. And because the two systems can't talk to each other, they always lose information between the two. In one year, I thought, oh, yeah, they said, John, would you like to go back to Washington for a couple of weeks and help work on that process of reconciling the individual agency statements? They didn't ask me if I'd like to. They said, you're going, but I was kind of excited about it. And I went, and then I realized it was simply a process where we sat there struggling with the thing until they finally blew the whistle and said, well, it's not going to reconcile. We had to wait for Treasury to confess that it wasn't going to work. And then we stopped our audit process on it because it wasn't working and we knew it wasn't going to work. And it just became this sort of pretend thing that we were doing as though we were actually going to use the information that we were developing to be able to audit it. And then we ended up you just end up throwing it all away because the Treasury says, well, it's not going to reconcile. And as a result, we disclaim an opinion on that information. So it was that. Fortunately, I only got put on that one time, but it can be a pretty cumbersome process. So my hat's off to folks that make that work. Okay, good. So let's go ahead and let's take a look back at our slides. Okay. And just sensing the time, I don't know that we are going to get through everything tonight, but that's fine. We have plenty of time to catch ourselves up. Okay, now when we start to deal with our statement of activities, now that's again back to the government-wide level. In fact, I think it was on the screen for city and county when we looked at it. It is like the income statement. Okay, now some interesting things about this. This is like an upside down income statement, and that we're, for the most part, going to have expenses at the top, and then revenues, for the most part, are going to be at the bottom of the statement. Now, notice it still has what? It still has the breakout of our primary government, our governmental activities, our business type activities. Again, governmental activities on the income statement, which we call the statement of activities, is going to have general fund, special revenue fund, debt service fund, covered project fund, plus the internal service fund. Okay, again, this is government-wide. We consolidate those in. Business type activity, I put in E there, is going to be the enterprise funds. This government is using, and most do, is using a function program display. In fact, at the government-wide level, we are required to use a function program display. Functions and programs are things governments do. For example, public safety. And public safety in the city and county, is public safety, is fire and police together in one function, public safety? I'm assuming,
Yeah.
I know for financial reporting purposes, it is. I don't know, do they use public safety or do they have a separate fire department, separate police?
I was muted, sorry. No, yeah, we put them together as public safety.
Yeah,
Oh, do you mean, I mean, they have separate departments,
yeah,
but
separate departments, but you put them together for financial reporting purposes.
yeah.
Some entities, governments, they'll actually combine the two departments and they'll call the whole thing public safety. But anyway, it's pretty much the fire and police though, right? Okay. And so notice we start with expenses. So this government spent 1,025,000 on public safety. If there were indirect expenses that are allocated, we show those as a separate column. Okay. Then we have these things called program revenues. Okay. And there are three categories of program revenue: charge for services, operating grants, and capital grants. Okay. Now, charge for services are basically considered exchange revenue. In other words, somebody pays for a service and then they get that service in exchange for whatever they paid for it. Okay. Now, charge for services for public safety is kind of interesting. And I look at examples. For example, if you were going to have to pay for a permit for some sort of demonstration or parade or something, and you need police coverage for that, police service for that, they might charge you for a license for that. And that might be an example of a revenue under the charge for services. What I often look for, and I'm going to ask the question because I couldn't find it when I was looking today at the annual comprehensive financial reporting stuff that I had on the screen earlier for you guys. This also includes tickets, like speeding tickets and parking tickets and stuff. Is that the case for you guys? Because I couldn't find it. I was looking for a number that was for fines and I couldn't find anything. But would that be a charge for service under, I think you guys call it, you don't call it public safety, but something else.
We call it public protection.
Yeah, public protection. Are parking tickets and stuff included in there?
Parking tickets are, I think, under MTA.
Okay.
But the question you asked about speeding tickets,
MTA, is that
sorry, the Municipal Transportation Agency, so.
Is that an enterprise fund or a
Yes,
government?
an enterprise fund.
Oh, I see.
Okay. But the speeding tickets, it's a good question. I would imagine it would be under, public protection.
Charge for services, right?
Charges for services, yeah.
Yeah, which I always find, I kind of chuckle to myself because charge for service, I don't know about you, I got a speeding ticket over here the other day and I didn't exactly thank the guy for a nice service afterwards. But anyway, I
Yeah.
tried to talk my way out of it, but that didn't work. But anyway.
Good question. I'll double check that, but yeah, I think that.
Okay. Yeah. So yeah, I'm just sorry, I'm having a flashback to me trying to talk the guy out of the ticket, but I'll spare you that story. These are considered program revenues. They align with the programs, right? Charge for service, operating grants and contributions, capital grants and contributions. Now, in this example, they didn't provide any, but these are also program revenues. Under public safety, an example, the federal government put in a program under the Clinton administration. It was when Clinton was running, you're all probably too young to remember, but he kept saying, I'm going to put 100,000 more police officers out on the street. And the way he accomplished that was through a program called the COPS program. And I forget what the acronym stood for, but basically they would give money for police salaries, police uniforms under operating grants, and then they would give money for various types of equipment. For example, some cities and counties, state and local governments can get money for drones to help with various law enforcement purposes. Some of these equipment where they have I had there was somebody held themselves up in a house down the street where I used to live, and I was running there one day, and there was a tank in the middle of the street. I was like, what the heck's going on here? And it was a, city vehicle that was used for, when somebody's kind of, threatening to, do something harmful to police and whatnot. And they bring this basically this tank, but all of those kind of things could come in, and the federal government will fund that under that COPS program. That would be operating grants, capital grants, and those are used to defray, as the charge for services are, the cost of the program, for example, public safety. Now, what's interesting about this during some of the defund the police conversations, it got out of hand and it turned into a big political football and whatnot. But I felt, it's just my personal, and I was on an assignment when I was working for the Government Accountability Office where we were looking at that COPS program. And, I thought, well, there could maybe be a line item scrutiny of, not cut out and defund and take all the federal funding out, but there could be, a line item scrutiny. Do you really need a tank? Is there some sort of, you know, um, politics to, defense contractors? Last time I checked, have a certain amount of clout and lobby in the federal government. Do you really need a tank at the local level? And so I thought there could have been maybe some discussion, more thoughtful discussion around the line items of the funding that comes from the federal. Now, who knows how the federal government will start to, voodoo in a way some of their policies by saying, hey, we're not giving you any of this money unless you, and I've seen some discussion of even tying it to the way, they count votes. And that's, to me, for me personally, is not how we should be running things. Okay. But the bottom line, 3 categories of exchange revenue. Excuse me. 1 category for exchange, the charge for services. 3 categories of program revenue. Charge for services, exchange. Operating grants and capital grants are non-exchange. Non-exchange meaning, hey, you don't necessarily have to perform in order to receive this money. Now, there's 2 different categories. There's government mandated non-exchange. That's when a higher level government says, you will do this. You will have environmental cleanup. You're going to do it. The state tells the county they have to do it, and they give them the money for it. Voluntary non-exchange governments apply for this money. For example, HUD often will provide money for some sort of community development, that sort of thing, and they'll provide that. And they literally, what HUD does, as I was on audit looking at HUD some years back, they have so much in a pot of money that's available, and then they go through the applications for, say, community development, and they award those until they run out of money. Now, they're supposed to be awarded on the merits of the project. Again, we live in a different world these days where it wouldn't be unfathomable to think that there would be some political implications to that, some work to try to see if you could get state and local governments to adhere to a broader national agenda. So these program revenues are used to defray the cost of all these programs. Now you look at this example, and it's pretty common. We have a bunch of loser programs. Look at every single one of those programs use more resources than they bring in, okay? But what happens? You come down to the bottom, and as I said, it's an upside down income statement because most of the revenue is at the bottom. General revenue, mostly taxes, property taxes, taxes, etc. And then the difference between our net program expenses and our general revenues constitute change in net position, which I have labeled here as light net income. And then as I was showing you earlier, we were seeing, hey, you have your beginning net position, which is like retained earnings. You add in the net income, and that yields you the ending net position, which we have seen how that's reported on the statement of net position at the government-wide level, which is where we are. We're just simply talking about the other government-wide statement. There's only two: statement of net position and which is like the balance sheet, and statement of activities, which is like the income statement. So when I take a look at you guys, and I was on that statement of activities, I didn't plan it, but wow, looks like I did, huh? And we see public protection, we see some charge for services, some operating grants, some capital grants. Okay, good. Maybe from the COPS program. I don't know. Does anyone know if you guys participate in that federal program? Okay, not sure where this money's coming from. Could come from the federal, could come from the states, usually a higher level of government that's going to provide this. But again, and this is common, different, was I looking at the right line items? Yeah, right here. Yeah, you know, typical stuff, losses, right? Negative numbers all the way down. And then here come the taxes. Okay. And again, that will tie up to the net position. Remember, I was looking for that number for the reconciliation purposes, but that was why it was highlighted there. But there's a change in net position, beginning net position, ending net position. Okay, so nothing too out of the ordinary there. Question? Okay, good. Well, let's go ahead then. And let's take a look at the slides again. Okay. And all this is a series of slides now that basically say what I just said. Okay, so we have the program revenues, and we have the charge for services was exchange, operating grants, capital grants are non-exchange, general revenue we saw were mostly taxes. Okay, and so I'm showing you those program revenues again, and then we have the net expense. That's where all those kind of what I was talking about, loser programs, if you were. Okay, and then we have the taxes in the lower section, which we saw on the bottom of our upside down income statement, were taxes of all kinds. There could be money coming in from investments and whatnot as well down there. Okay, programs were shown by function. We saw direct, and we saw an allocation of the indirect. Okay. All right, so let's just take a look, and our practice exam will be later, but I thought it might be a nice relief to put in a question here, how you might be tested on some of this material. Statement of activities, okay, is a government-wide statement. If it's government-wide, the focus of both the government-wide statements, statement of net position and the statement of activities, is an operational accountability focus. Okay. All right, fund financial statements. Okay, and let's take a look at our fund financial statements. And we have two governmental fund financial statements, the balance sheet and the statement of revenues, expenditures, and changes in fund balance. The only category that provides a statement of cash flows is the proprietary funds. And we'll talk about that when we get to chapter 7 about proprietary funds. The names of the statements, though, when we are talking about our fund level for our proprietary statements, we have a statement of revenues, expenditures, and changes in fund expenses, and changes in net position, and then the statement of cash flows. For our governmental funds, it's called statement of revenues, and because of our modified accrual, it's called expenditures and changes in fund balance. Change in fund balance is like the net income. Change in net position is like the net income for the statement of revenues, expenses, and change in net position. It's basically a statement of retained earnings and a statement, income statement combined. And then the statement of cash flows is only prepared by the proprietary funds. When we get to the fiduciary funds, then we have two statements analogous to a balance sheet and an income statement, statement of changes in fiduciary net position, and the statement of net position, which is like the fiduciary net position, which is like the balance sheet. Okay. So governmental funds, we have 5 different governmental funds, okay? General fund, special revenue fund, debt service fund, capital project fund, permanent fund. These are called fund types. There's usually only one general fund, and then there can be several of these other types of funds. And then we'll talk about proprietary and fiduciary coming up on some later slides. Now, as we have stated, okay, let's see if I guess I'm not going to get rid of that. It's kind of in the way. Let's see if I can. Yeah, I guess I can delete all this. Make it a little neater. Okay, yeah, that looks okay. So taking a look at all this now, we have our okay, now it's not going to show it to me at all. Okay, that's all right. So we have what? We have current financial resources, measurement focus, or did I go to 2 slides too many? Here's our categories. Okay. All right, that's fine. So we have our current financial resources, measurement focus. We've talked about that. Okay. Modified accrual basis. In other words, if we purchase a fixed asset, we're going to debit expenditure, and we're going to credit cash for whatever that is, right? We'll talk more about journal entries, next time or so. Okay. Now, what happens? We have capital assets and long-term liabilities are not recorded. That's a classic example, although there are some revenue recognition rules that are different that we'll talk about when we get into chapter 4 and whatnot. Okay, but classic example, capital assets, long-term liabilities are not recorded. Okay, and there is no depreciation reported at the fund level, at the governmental fund level. We've understood that for City County, San Francisco, depreciation is reported, but it's at the government-wide level. And some entities for certain infrastructure assets don't even use depreciation expense at the government-wide level for infrastructure assets. City and County, as Carmen has informed us, does use depreciation at the government-wide, but not at the fund level. No capital assets, no depreciation. Okay. Now, we saw the government-wide side earlier. The point of this slide is to show us the required format for our governmental funds. And now we're going to follow more the formula. Instead of the bottom line being the difference, the bottom line is going to be the roll-up of the liabilities plus the equivalent of the stockholders' equity. So we'll see the total assets and plus deferred outflows, which by the way, it's only current assets, that will add up, and then that will be equal to our only current liabilities plus the deferred inflow, which is like unearned items, but not quite. They're not quite liabilities. They're the caterpillar, right? And so we'll have that down there with the liabilities, and then we will add we will add our fund balance, which is like retained earnings, and then we have to report that total. So this is more like what you would see. This format is more like what you would see in commercial accounting, where we can see that the assets will tie to the total of the liabilities and the stockholders' equity, although in our case, stockholders' equity is only the fund balance, okay? Notice, for contrast, government-wide, we were showing you that net position, the thing that's like retained earnings, what's left over as the bottom line, and we don't gross things up the way we do at the governmental fund level on the balance sheet. So you take a look, and as I showed you earlier, we have our major funds, our non-major funds, current assets, current liabilities, no long-term items. Okay, our deferred inflow of resources is down there next to the liabilities, but they're different, right? That's the caterpillar thing. Okay, or the cocoon. That's actually the cocoon. The caterpillar is as a liability. The cocoon is the deferred inflow because it's heading towards someday being a revenue. And then you come over and we have our fund balance, and notice that the total liabilities and fund balance add up to that total assets, just like it would in commercial. And that is a required format. Okay. And then notice the reconciliation down here, guys, where we will reconcile from our total fund balances to our net position. And I'm not going to torture you by going back up to the government-wide level to see how that ties up. We've already looked at that. Okay, now when we look at these different categories of fund balance, okay, and GASB came out with this, I'm going to say maybe about 5 years ago or so. They came up with two broad categories for our fund balance: non-spendable and spendable. Non-spendable and spendable. Now, let's first talk about non-spendable. Non-spendable is basically saying, hey, it's not cash, it's not receivable. Think of it this way. Let's say you go to Costco, okay, and you go around holiday time and you see they got a 50-pound sack of nutmeg, and you say, wow, for 20 bucks. And you say, wow, 50-pound sack of nutmeg for 20 bucks, whatever, and you buy it. Then you get home and you say, what the heck am I going to do with all this nutmeg? I mean, all I need, in December is a sprinkle on my eggnog and I'm done. Why did I buy a 50-pound sack? So you decide to take the 50-pound sack of nutmeg and take it to Safeway and say, hey, give me some milk in exchange for this. Say we're going to say, you got any cash? You got a credit card? Or, we'll sign here, we'll give it to you, but we're not going to take. So that nutmeg that's sitting in your inventory is non-spendable because you can't really spend it like cash. Okay. And so non-spendable fits into that category, and we are required to call out what our non-spendables are for. And here we have a non-spendable for inventories as part of our fund balance. Now, what's beautiful about that is if you go back to the top part of the statement and you look at inventories, you see that same number, 55,000. So not only do we report inventory because it is a current asset, so under modified accrual, we would report inventory, but then we call out that we have what? That we have non-spendable inventory of 55,000 because we can't spend that like cash. Now, you see these other categories, and by definition, these other categories are spendable. Whatever. I should probably have this in tablet mode, but I'm tired of fighting with the machine. So I'm going to just scribble. Okay, so spendable. Okay, we have these, 4 categories for spendable. 2 broad categories, non-spendable and spendable. But then we break the spendable into 4 categories: restricted, committed, assigned, unassigned. Now they are listed in order here in terms of how difficult they are to spend. Okay, how difficult is it to spend say, just thinking of cash, restricted cash versus committed versus assigned versus unassigned. Okay. So we have the non-spendable inventory, prepaid. You pay for your insurance. You pay for your house insurance. You can't take your, house insurance and go to Safeway and say, hey, here's the insurance I paid on my house, but, I'm going to cash this in, or I'm going to sell the house and I'm going to get some money back. So take this now, and then you'll have that money when I sell the house and get whatever the prepaid amount of insurance was. No, it doesn't work that way. Okay. So that's considered what? Non-spendable. Okay. Then we have restricted. Restricted cash. Now it's spendable. It's in the form of cash, something we can spend, but it is restricted by those outside of the entity. So it's restricted by what? Creditors, bondholders. I issue bonds and I tell the bondholders that I'm going to use the money to construct some sort of capital asset. Well, that money is restricted in that I must use it per the bond covenant. I can't just sit there and decide, oh, okay, yeah, I know that I got this money to construct a county courthouse, but let me use the money for, police salaries. No, it doesn't work that way. Okay, it's restricted. You must use it for that purpose. Enabling legislation. Enabling legislation says, hey, we passed legislation and that was going to raise new funds, maybe a new tax or something. And in the legislation, it said that that money will be used for that purpose. Well, that money would also be considered restricted, because as you're taking that money out of people's paychecks or whatever in form of a tax, you have to use it for what you initially legislated. Now, sometimes folks will say, well, you can go back and change that legislation. Try it sometime. Try to change a legislation that said we raised the money for this purpose, and that's the reason we were able to even take the money from the check. But now we're going to still take the money from the check, but we're going to use it for some other purpose. Very difficult to change that. And so we consider that restricted. Again, remember, how difficult is it to spend the money is the order that we're going and starting with restricted. Okay. Then we have what? We have money that is committed. Money that is committed means that the highest decision-making authority in the government decided how that money should be used. Now, a couple things. You say highest decision-making authority in the country, that's the president, that's the mayor. When it comes to spending money, it's Congress, it's the city council, it's the state legislature. When it comes to spending money, they are considered the highest decision-making authority. That's why President Trump pulled back on this thing that he was saying that money that was appropriated for non-for-profits, he tried to sign an executive order to say that money wasn't going to be provided. And I think, how can I put it? When you're making things up as you go along, it sounds good, but I think what probably happened is they probably got some calls from some of their friends on Capitol Hill to the executive branch and said, it don't work that way, but you can't do that. When it comes to spending money, Congress decides how money is spent, and that money was already appropriated for that purpose, and you can't just all of a sudden decide to change it. Okay, that money is committed. Now, you say, well, John, what's the difference between the committed and the enabling legislation? With the committed, it was money that was already available. It was general money. And then they said, we're going to earmark this money for this purpose, and now that money has been committed. Now, they can go back and change their mind, but again, got to go through a formal vote of the legislature to do that. And that can often have political implications. And it's not so easy to change that. And so that is committed. It's not as bad as restricted, but it is a little tougher to change. Then it starts to become committed. Assigned is basically city managers can decide how to spend money. So what happens? They may get a budget that says the budget is going to be used for road improvement. Let's stick with that, okay? But then they decide, well, wait a minute, not wait a minute, we're going to use the money for road improvement. But within that road improvement, we can spend money on salaries for employees. We can spend money for equipment. And so they go ahead and they decide they're going to spend some of that money for equipment, and maybe they order that equipment or whatever. That would be considered assigned. And so we're going to talk about the encumbrance process later. But when we get to preparing our fund financial statements, we would call that money out as having been assigned. You could sometimes encumber money and call it committed. For example, if you just bought something that you can sort of cancel the order on and it's not a big deal, then you might call that assigned. But if you had something that you were constructing to specifications, hey, we want garbage trucks that, have certain environmental and this, that, and it's not just a general fire truck and they're or garbage truck, whatever, fire truck, and they're constructing that specifically for you, then the nature of the contract might be, hey, you need to purchase this thing. Then you might call that money committed because, again, we're talking about the difficulty of spending or maybe changing your mind as to how you're going to spend that is the order that this thing is going in. I use the mnemonic RACAO, spendable RACAO, okay? And it's and I live with the idea that the dumber the mnemonic, the easier it is to remember. So RACAO, restricted, committed, assigned, and then the easiest to spend is unassigned. That means that, hey, I've got this money that I haven't spent. It's a positive amount, and I'm going to be able to use this, and I can now spend it again within the confines of whatever it is the fund requirements are, but I can spend it anyway appropriately under the requirements of what that fund is. And I haven't decided exactly yet how I'm going to spend that. Okay. Now, only the unassigned fund balance would be positive. All others would have a negative fund balance if they had a fund balance. Okay, would have to be negative for the other funds. Okay, so a couple questions. General fund resources that are limited as to use by constraint imposed by law, constitutional enabling legislation, right? We saw that was what? Restricted. Again, if you have a covenant outside of the entity or inside the entity, it's enabling legislation, that money's restricted. Bond covenant says we're going to use the money for a county courthouse, then you got to use it for the county courthouse. That money is restricted. Okay. You may say the money has to be used on hard cost. Okay. Can't be used for things like, taking a trip to Europe to look at county courthouses in Europe to see how you want to design yours. That might be a restriction that it can only be used for hard costs. So that money would be restricted because it has to be used specifically now, not only for the county courthouse, but for a particular type of expenditure for that county courthouse. Okay. Okay, good. So those are the different categories. Let's take a look at our operating statement now. What time are we on? We were saying we're going to get out, what, about 15 minutes early? That's what we're doing, right? Okay. So let's go ahead and finish up our discussion of the governmental funds. Let's do that. And then we'll adjourn and we'll pick up chapter 2 next time. Okay. But distinguishing between revenues and other financing sources and expenditures and other financing uses. Okay. Now, other financing sources, and I know that you know this, but sometimes my students struggle with this. What are other financing sources? They're like non-operating revenue, okay? And other financing sources really fall into two broad categories. Transfers in, that's when one fund transfers money into another fund, and long-term financing proceeds, like we issue some bonds. We literally report those on the operating statement like a revenue under modified accrual accounting, which is very different. That's why when I showed you that reconciliation, we had to subtract those from fund balance because at the fund level, we treat those as though they are like a non-operating revenue. We call them other financing sources. At the government-wide level, full accrual accounting, it's a long-term liability. We don't have long-term liabilities at the fund level, so we treat them as other financing sources. For our other financing uses, that's basically transfers out. That's when one fund transfers money out to another fund. Okay. Now, when we look at our effect on fund balance for these different items, our revenues and our other financing sources increase fund balance. They're like revenues, and non-operating revenues increase our retained earnings. Revenues and other financing sources increase fund balance. For our expenditures and other financing uses, they decrease fund balance, just like what expenses and non-operating expenses decrease retained earnings if we're talking about a commercial entity. Again, when we recognize our revenues, okay, and our expenditures, modified accrual accounting. We're going to get way into the revenue recognition rules in Chapter 4. Expenditure, again, we've given the classic example. You acquire a fixed asset. That's treated as what? An expenditure, not as an addition to our capital assets. Okay, so we take a look at this example, governmental funds. Okay, we have what? We have our general fund. We have all these other, these are all major funds, right? This other governmental is going to be non-major, right? Okay, and then we have what? We have our revenues, different taxes, okay, some charge for services, expenditures. Now, we're going to talk about the way governments organize, the technical terms for how governments organize their statement of revenues, expenditures, and change in fund balance. But notice this current, and then we start listing different programs, okay? So current is an example that I'm going to draw a blank, guys. I'm sorry. Character. Okay, sorry. I should know that off the top of my head, but sometimes, I'm getting old. What do you want me to say? Okay, so current is an example of character, a way that we are going to display. And by the way, GASB doesn't say, yeah, you have to have so many of these. GASB says these are labels that you may choose to put on your expenditures. So most governments will do something like this, where they'll say, okay, we're going to have a program, but within program, with a program outlay, we're going to show you whether it is current or whether it is for debt service or whether it is for capital outlay. That's putting a character designation on there. So when you look at this, you can kind of see, this government chose to show you the period that will be benefited from these. So even though we will treat a capital expenditure as an expenditure, okay, money that we spend on capital items as an expenditure, capital outlay, you're seeing, okay, that's a little different than these current ones up here, which maybe are for salaries, versus these capital outlay ones, which will probably have a longer term benefit to this government. Or debt service. If you're an entity that is using debt to finance longer term items, it's implied here that what? Okay, well, this will probably benefit future periods. Now, if you're the federal government, you incur debt generally not to pay for things that are going to benefit future periods. Many of the entitlement programs, Social Security and whatnot, Medicare, are, for current expenditure purposes. Department of Defense, I don't know. I guess it's future periods, but they seem to keep coming up with reasons to spend, billions of dollars, but whatever, and so, what happens to the old stuff when they make the new stuff? What happens to the old stuff? Did they throw it away? I don't know what happens. What do you do with a, five, $30 billion airplane after you invent a $50 billion airplane that does things that the $30 billion airplane couldn't do? Do you throw the 30 billion one away? I don't know. Anyway, let me stop. And then you have the capital outlay character designation here. Now, this line item, excess, and if it had been parentheses, it'd be a deficiency of revenue over expenditures. This is like the operating income item on an income statement. Remember, in commercial, we have what? We have revenues minus expenses give us operating income. And then we have what? Then we have our non-operating items in the calculate and then tax in the calculation of net income. In government, what we do is we just have this line item called excess of revenues over expenditures. That's like non-operating. And then we go, operating. That's like operating income, that excess of revenues over expenditures. And then we go into what's like the non-operating section, but notice what it is, guys. It's other financing sources and uses. Other financing sources, long-term debt proceeds and transfers in. Other financing use, transfers out. Okay. And then you have this change in fund balance, which is like net income. And then we kind of combine that statement retained earnings approach where we'd have beginning retained earnings plus net income minus dividends, but governments don't pay out dividends. Minus dividends would give us ending retained earnings. Well, we kind of just stick that onto the bottom of our statement of revenues, expenditures, and change in fund balance. Okay. And then as we saw, we have the different funds. Then we have functions or programs, things governments do. I keep calling out public safety. Organizational units carry out the function. So fire and police often form the public safety function. Activity are things that the organizational units do to achieve the organizational unit's goals of public safety, okay, the function of the organizational unit. For example, maybe the fire department does some building inspection to make sure all the fire exits are not closed off. And unfortunately, there was the bad situation some years back with the housing authority not following that, okay? And then current or future period is the character. And so we saw current versus capital outlay versus debt service in the example. And then object class would be reporting salaries and whatnot. Okay, we didn't see that in the example. Okay, all right, good. This is giving more definitional information about the different categories or classifications of expenditures. Okay, so what I want to do before we adjourn, because we're getting up on time here, is let's just go ahead and take a quick look in governmental fund balance sheet. Okay, doesn't call them out as current assets, but by requirements, these would all be current assets. Okay, receivables, charge for services, due from other funds. Okay, that's what we call it when another fund has to send money. We don't call it account receivable, we call it due from other funds. Okay, loans receivable. I guess inventory is rolled up into the other assets, I guess. Okay. Liabilities. Okay, again, all current. There's some deferred inflows. Okay. Fund balances, non-spendable, right? Restricted, committed, assigned, unassigned. I call this spendable RECAL. Okay, restricted, committed. Okay, so we see the different categories. Okay, we looked at that reconciliation already. Then we come down to the statement of revenues, expenditures, and change in fund balance, all the different taxes, intergovernmental, some money coming in from the federal government, expenditures, character display, right? Different programs, character display, debt service, capital outlay. I mean, you know, bigger numbers, right? That you're all painfully aware of, but same format. And then excess of revenue over expenditures. Looks like we've got an operating income here. Okay, oh, by the way, general fund is the only major fund. These are all non-major, right? These are all going to be non-major funds. Okay. And then we come over and we have the other financing sources, transfer in, transfer out, long-term debt type proceeds coming in. Okay. And then what? Net change in fund balance, beginning fund balance, ending fund balance. Okay. And just to make sure how we're understanding that number, of course, matches the total of fund balance for that 2563, the total fund balance there. Okay. Questions?
Oh, I have a question.
Mm-hmm. Sure.
If we have questions about the work problems in either the practice midterm or the problems in the workbook, is it okay that we email you
Yeah.
questions?
If you do, though, I do have some guidelines I'd like you to follow. Okay. Which is put in there accounting 304. So I know because I have other classes, right? And so it starts to crystallize my thinking as to what it is. Because sometimes people will say, I don't understand question number 5. And I'm like, what class? Okay. So I need to know the class. And then be specific and you call out. I was looking at chapter 2 homework question from McGraw-Hill on number 11, just again making that up. The book says the solution says the answer is A. Let's say it's a multiple choice question. The answer says it's A. I don't understand why it's A because, and then I know what it is that, you know, because sometimes students will say, I don't understand why it's A. And when I look at it, I'm like, well, I completely understand why it's A. And I'm going to be sitting here repeating to you something that you already maybe don't understand, you know? And so then we start to get into this, geez, I'm still confused thing. So if you tell me specifically, it's like going to the doctor and saying, well, my arm hurts when I do this. Okay. Of course, if he's they're a decent doctor, they won't say, well, don't do that. They'll say, oh, okay, well, maybe it's the flexoid or something. You know, that allows me to better diagnose what's troubling you so that I can articulate an answer that is going to be specifically helpful to whatever question you have.
Oh, okay. Yes, I can do that. Thank you.
Sure. And we will go through the rest of the slides for chapter 2, Mary, and the practice midterm for chapter 2 next time, even though it's already posted up there. And I would encourage you to go ahead and look at it in advance if you want. And you can ask questions, you know, during the class too, as we go through some of this. Okay. Question, guys? All right. We will pick up here. Okay. Somebody make a note that we made it all the way to what? Slide. We'll pick up at slide 48. Okay. Sound good?
Yeah.
All right, guys. Don't worry if you're looking at the syllabus and say, oh, we're behind or something. We'll figure it out. We'll get there. Okay.
Thank you.
All right, guys. Have a good night. I'll
Thank
see you
you.
next week.
Thank you.
Thank you.
Good weekend.
Good weekend.